In this video, you're going to learn about the best loan types for first-time homebuyers, including the pros and cons for FHA, USDA, conventional loans, VA, and we're going to have a surprise bonus section at the end. So if you're ready to make an informed decision without the stress, you do not want to miss this video. And if we haven't met yet, my name is Ryan, and I help homebuyers just like you who are struggling with navigating the maze of all the mortgage options for the first time. Now, after helping over 3,500 homebuyers over the last 19 years, I've guided countless people through the ins, the outs of the mortgage landscape, helping them find the perfect loan type that fits their situation specifically. Now, stick around to the end of the video, and I'm going to cover a topic that I get asked about every time I meet with the first-time home buyer. All right, so let's go ahead and dive right into the mortgage landscape. Now, before we get too deep, there are some numbers that you need to know. It's crucial that you understand why your choice of mortgage really matters. It's not just about getting approved for the home loan. It's about setting yourself up for success over the next 3 to 5 to even 10 years. You'll want a mortgage that's not only going to get you into that dream home, but actually fits your financial situation for the long term. So let's break down some of the key components you should focus on as you go through this process. So the very first thing is you want to understand the difference between a loan balance and the purchase price. All right, so first up, loan balance. This is the amount that you're borrowing from the lender. It's important to have a clear picture of how much money you need to buy your home. Now, remember, just because you qualify for a high loan balance doesn't mean you should borrow all of that amount. You got to make sure that it aligns with your financial goals and doesn't stretch your budget too thin. The next thing is the interest rate. So you were making a promise if you borrow this money, say $100,000, that you're going to pay it back. Now, in exchange for the bank giving you this money, that's essentially going to cost you interest. Now, this is essentially the cost of that loan balance. Now, a lower interest rate will help you save money. However, rates can vary based upon your market conditions, your credit score, the loan type. Right now, rates are higher than what they have been over the last couple of years, but they'll come down eventually. So it's essential to shop around and understand how different rates can impact your monthly payment and your overall cost over the long term. And the last thing is the dreaded PMI or MIP. So PMI is a conventional type of thing, and it means private mortgage insurance. And then on the other side of the coin, you have government loans like FHA who have MIP. Now, MIP is basically the same thing and basically means mortgage insurance premium. So kind of just inverting the letters. Now, we're going to go over the difference between FHA and conventional PMI in a little bit, so stay tuned for that. But it's an important piece to understand that many different loan types have many different types of insurance or mortgage insurance to make this all happen. So I'm sure that you can already tell that the mortgage approval landscape is more than just a straightforward approval. It's about making an informed decision that aligns with your future and mental health. Now, keeping these components in mind will help you navigate the process and choose the right mortgage for you. Now that you have a good grasp of the basics, let's go ahead and explore the different loan types available for first-time homebuyers. Let's go ahead and talk about FHA loans first, and it's often referred to as the flexible favorite. So first off, one of the biggest advantages of an FHA loan is the low down payment requirement. With just 3.5% down, it's perfect for home buyers who need a little bit of help getting started. This makes homeownership much more accessible, especially when you're working with limited savings. FHA loans have easier credit score and debt to income ratio guidelines, which means that more people can qualify. So if your credit isn't perfect, don't worry, you still might be able to get an FHA loan and move into your new house. You can actually look at FHA as kind of a soft, squishy pillow that if you have a need for a little bit of grace, it's probably the option that you want to go with. Now that we've done the pros, let's go ahead and do the cons. Let's discuss some of the downsides. One of the major cons is mortgage insurance. Now, the bad thing about FHA a couple of years ago is they made mortgage insurance lifetime, which means that you're going to pay it as long as you have the loan. And it can actually start to add up monthly if you don't watch it. So you'll end up paying this as long as you have this specific FHA loan, which can add to your monthly expenses. While it helps protect the lender, it can actually feel like a little bit of a burden on your budget. So it's something to factor in when you're calculating your affordability. Also, FHA has strict property standards. This means that the home you're considering needs to have a certain minimum livability standard. So no peeling paint, broken heaters, broken windows. This is actually a benefit to you as the buyer because it's going to ensure that you're buying a safe and sound property, but it can actually limit some of your options, especially in certain markets. Now, keep in mind that one of the people that we need to appease out of this whole thing is not me as your lender, not your real estate agent. It's not you actually, it's the listing agent. So the reason that this is important for an FHA loan is because FHA has higher property standards of what it's going to take to get the loan approved. Listing agents know that. And as such, they're going to look at FHA loans and compare it to the condition of the property that they're listing. And if there's anything in the house that could potentially be an issue with FHA or FHA would require it to be fixed, they may skip out on your offer and go with something like a conventional loan that doesn't have as high a property standards. So the pro here is you're getting a house that's more safe, more sound, more secure. The con is listing agents might skip over your offer because the house may not be FHA ready. We're gonna hit the pause button real quick and I'm gonna share a quick personal story. When I was starting as a first-time home buyer, I considered FHA loans myself to remember feeling overwhelmed by the process, but the low down payment made all the difference for me. I didn't have a whole lot to save and it allowed me to get into a home without draining everything that I had in the bank account. I was able to focus on what really mattered, and really getting the house secured was my main priority. So if you're in a position where saving up for a large down payment feels tough, especially in an inflationary environment, an FHA loan might be your ticket to homeownership. All right, so now that we've covered FHA loans and its benefits, I hope you're starting to see how different loan types can shape your home buying process. But before we move on to the next loan type, I wanted to make sure that you're aware of some fantastic resources that I have shared below in the description. So these tools can actually help you navigate the mortgage landscape and make the best decisions for your situation. All right, so now that we've talked about FHA, let's go ahead and move to USDA. It doesn't get talked about a lot, but USDA is actually a hidden gem when it comes to first-time home buyers. First and foremost, one of the biggest advantages for USDA is the loan requires zero down payment. That's right, you can finance 100% of the loan without putting down a down payment. And this is actually an incredible option for those of you who want to move into a home without having thousands of saved up funds first. So no down payment is a huge win for USDA. Another perk is USDA typically has lower mortgage insurance. Now this helps lower your monthly payment and helps your budget go further. Without the extra cost, you can actually allocate more of your monthly income towards other essential expenses like home maintenance or enjoying a new neighborhood. One important consideration is that there are income limits. So if you have a decent income, you may not qualify for a USDA loan. Now, this is county by county across the United States. And basically what this means is if you are making over a certain amount, you are not eligible for USDA. So for USDA, and this is the only loan that's like this, it is household income. So if you have a kid that's 18 and is working at the local grocery store, that income counts even if they're not going to be on the loan. So once again, it's household income, not just the income of the person that's going to be on the loan. Additionally, USDA loans are only available in rural or specifically designated suburban areas. So you'll need to check the USDA map to see if that house that you're eyeing is USDA approved or not. So that being said, let's actually go check to the map and see what the country looks like for USDA type loans. Here's the map of the United States. And everything that is white is USDA approved. Anything that is orange is not going to be USDA approved. So let's go to my hometown, Columbus, Ohio. So you can see here that the big city itself is not USDA approved because it is in orange. Now, these maps change constantly, so you're going to need to try to go back and see if your area that you're looking in is USDA approved or not. But if we go to the south side of Columbus, you can see that just based on the other side of this road, that this section is USDA approved. So all the homes in this neighborhood are USDA approved, but the homes that are in this neighborhood are not. So once again, this is the USDA map, and you can see that the majority of the state, the country is USDA eligible, but there are going to be areas that are not. So anything in orange is not USDA approved. And this is a free resource that you can find just by typing in USDA map into Google, and I'll also include it in the description below. All right, so now that we've already talked about USDA, let's go ahead and move to the next loan type and see how they compare. The next loan type we're going to talk about is conventional loans, and it's often considered the gold standard of mortgage options. So first up, one of the standout features of a conventional loan is they do allow higher loan limits. So if you're looking in what they call a high cost area, which means home prices are higher than the normal average for the rest of the country, conventional loans can actually give you more buying power. This is particularly important if you're targeting homes that are above the average market price. Having that extra financial flexibility can actually make all the difference. The second thing is you can actually get rid of mortgage insurance with a conventional loan. It's another perk that if you can put 20% down, you can actually skip the pesky mortgage insurance fee altogether. Now, there's actually a backdoor to this. If you don't have 20% saved, you can actually pay a one-time fee. It's still mortgage insurance, but it's not monthly. And if you pay that fee, you can actually get out of mortgage insurance without putting 20% down. So you want to talk to your loan officer about that. First, it's actually what my family did when we bought our house. So we put 13% down, we paid the fee, and instead of putting that extra 7% down, I took that money and paid off 2 car loans when we bought our last house. This can actually save you a lot of money each month, allowing you to invest in other areas of your home or your lifestyle. Now, one of the cons is it does typically have higher down payment requirements. Conventional loans typically need more upfront if you want to avoid mortgage insurance. Now, if you want to avoid mortgage insurance, you've got to be prepared to make a larger down payment of like 20% or pay that fee. And for most first-time home buyers, this can be a huge hurdle that requires careful financial planning and a long runway. Additionally, conventional loans often come with higher credit score requirements. Now, based upon Fannie Mae and Freddie Mac's guidelines, they say that they can go down to a 620 where FHA is 580. However, in my career, I have not gotten a loan for conventional approved that was under 660. So if your score isn't where it needs to be, you might face higher interest rates, which could also affect your overall loan cost. Let's go ahead and hit story time again. So I was once working with a client, and we're just going to call her Jessica, who was really determined to buy her first home in the competitive market that we actually just left. She decided on a conventional loan because she had been saving diligently and managed somehow to save 20%. So leading up into her getting approved, the process wasn't easy. She had to ensure that her credit was up to par. She had to put in the work of saving money. She had to make sure her bills were on time. And ultimately, we were able to secure the loan with all of that hard work that she put in. By opting for the conventional route, Jessica not only avoided mortgage insurance, but she also benefited from a lower interest rate. Now, fast forward a few years, and Jessica is thrilled with her decision to put in all that hard work ahead of time. She built up a ton of equity in her home faster. She built up a ton of equity in her home much faster than she would have if she had the required mortgage insurance. So if you're in a position to make a larger down payment and have a solid credit score, a conventional loan might be a fantastic option for you, setting you up for long-term success in being a homeowner. Next, we're going to dive into an intriguing option that's only available for certain people. Last on the list is we have VA loans, which once again is going to be an advantage for only veterans. So if you're a veteran, this program is fantastic. So VA loans offer some incredible benefits. So they offer 0% down loans, which means you can purchase your home without having to save up any for large down payments. Plus, you won't have to deal with any mortgage insurance. Now, generally speaking, VA loans have very competitive interest rates compared to conventional and FHA loans. So once again, if you've earned the right to get a VA loan through serving your country through the military, you have a lot of benefits that go with it. So one of the big cons is the approval process is a little bit stiffer. So we are going to look at your overall monthly budget, how many people you have in the house, how many kids, if you have child support. If you have a really big house, we're going to calculate the square footage and we're going to calculate home expenses. So one of the cons of a VA loan is the eligibility requirements are a little bit stiffer. Now, one of the crazy things are, and it's not really that surprising, is VA loans actually perform way better than any other loan type. One, because these are military members who, once again, they drive themselves and pride themselves on a lot of honor in doing what they say they're going to do. And secondly, in my opinion, how VA loans are approved and looked at and judged when it comes to underwriting is how all loans should be done. Because once again, we're looking at all of your expenses and not necessarily just your gross income. We're looking at a lot, specifically your net income and your monthly expenses. So another con is, yes, you do not have mortgage insurance on a monthly basis, but you have a mega funding fee. Now, this fluctuates if you are exempt based upon a disability. This also, if you have used your VA home status before, wouldn't necessarily make you a first-time home buyer, but you can use VA over and over and over again. The funding fee can be quite large. So for a $100,000 house, it can be like 3.5% as of 2024. So that can be a hefty price that you got to pay. Now, it is financed into the loan. So for example, if you have a $100,000 loan and your funding fee is 3.5%, your new loan amount that you're going to be making payments on is $103,500. So it gets added into your loan. So technically it kind of makes your payment go up a little bit, but also technically speaking, there is no mortgage insurance on a monthly basis. So go figure. All right. So I promised you a little bit earlier on that we're going to talk about something that I get asked pretty much by every first-time home buyer. And it is, what benefits do I have as a first-time home buyer? So speaking of loan types, down payment assistance is not its own separate category. So when you look at all the different loan types, and I love food analogies, I'm a little bit chubby, so hang with me here. So when you are looking at things like renovation loans or down payment assistance loans, or really anything like that, that is basically a topping that goes on top of the base ice cream. So you have FHA, you have VA, you have USDA, and you have conventional loans. So that being said, those are your base flavors of ice cream. And on top of those base flavors of ice cream, you can add one topping. So you could have a renovation, you could do manufactured housing, you can do a construction loan, you could do down payment assistance, which is what we're going to be talking about next. So down payment assistance is not its own loan. It is basically a topping that goes on top of a USDA, an FHA, a conventional, or a VA loan. So these programs offer financial assistance for people who need to cover down payment, which makes homeownership more accessible to those who might feel overwhelmed by the upfront cost and saving for a long time. So if you're wanting to buy a home, but are worried about the amount of savings that you have in the bank, down payment assistance actually is going to be a big help to you, and you're not alone with needing that cash. Now, not all down payment assistance programs are created equal. So they're basically going to break down to a couple categories, but first thing that we're going to talk about is grants. So these are funds that you don't have to pay back, which can significantly reduce your initial cost. All right, so imagine, if you will, you have someone who is really, really rich, and he has $10 million that he wants to donate to some local area. So that being said, he puts $10 million into a checking account. And over time, home buyers take $5,000 here, $10,000 here, $20,000 here. And over time, that $10 million starts diminishing until it's all gone. So one of the benefits of grants is they are not needing to be paid back. One of the downsides of grants is sometimes the funds run out. So they're not always reliable. And this usually happens around early summer to midsummer, because the funds usually get replenished at the first of the year. And by the time summer rolls around, which is really the busy season for most markets, the funds are gone. So I'm not a big fan of grants because they're not reliable, and they may not always be there when we need them. So the next type is going to be bonds. Now, this can also be considered a loan. So these are often low or no interest loans or deferred payments that help cover the down payment and sometimes even the closing costs. So this option is particularly beneficial if you're looking to stretch your budget a little bit further while still trying to get approved for the first home loan. So the thing I really like about bonds is they are very reliable. There's always money available. Chances are the interest rate is going to be a little bit higher. There's going to be some fees with it, but most of the down payment assistance programs that I work with my customers with is going to be bond programs, because once again, that reliability and that security blanket of knowing that they're always going to be there. And the last one to consider is just a straight up loan. So there are some mortgage companies that will loan you the down payment, and it's going to create a second mortgage payment for you. So that way you have to pay it back. Now, generally speaking, these loans, these second mortgages, if you will, are going to have a higher interest rate, and you're going to be stuck with the same mortgage company doing your first and your second. So if you have a loan or you're working with bonds, for example, you're going to have to potentially pay that money back. Now, the nice thing about bonds is over a certain period of time, the money gets forgiven. So like the one that is really prevalent where I'm from, if you live in a house for 7 years, the bond is forgiven, the down payment assistance is forgiven. If you sell the house before the end of the 7 years, when you go to sell your house, you're going to pay off that bond loan. Now, The same thing kind of applies to loans, second loans as well. Now, it's important to know that these programs are designed for low to moderate income families, so eligibility can vary pretty wildly. It's actually crucial that you check with your local housing authority or your loan officer or a nonprofit organization for that specific criteria. Now, 9 times out of 10, you're not going to have to do anything to get approved for these loans. The loan officer that you're working with is going to take care of that for you. They often have tailored programs that actually fit your unique needs. So here are some practical tips when it comes to navigating the down payment assistance topic. Start your search early. Some programs have limited funds and, like we said, can run out pretty quickly. The sooner you begin looking into those options, the better chances you're going to have of landing the right type of assistance for you. So once again, they might have you speak with the housing counselor for personalized guidance on those available programs in your area. A housing counselor might actually be a fantastic resource that can help you understand your options and the application process, making sure that you don't miss out on potential benefits. So if the thought of saving for down payment actually feels pretty daunting, remember that down payment assistance loans can actually be a safety net, providing you the support you need to turn homeownership from just a pipe dream to actually a reality. Now that we've discussed some various loan options, let's go ahead and shift gears and start talking about budgeting and long-term planning. This is actually where the rubber meets the road for many first-time home buyers. There's a difference between actually qualifying for a home loan, meaning getting approved for the loan, and actually being able to afford to make the monthly payment each month. So just because you qualify for a certain loan amount doesn't actually mean that it's smart to spend that much. You want to make sure that you're aiming to keep your housing costs somewhere between 20 and 30% of your net income. So gross is the income before all the taxes come out, and net is what you get in your bank account. It can actually help ensure that you're not stretching yourself too thin. It can actually sit and cover other expenses like groceries, saving a little bit of money, and let's be real, having a little bit of fun now and then. So practical tip for you, avoid financial stress by creating a realistic budget for yourself before you ever start house hunting. This means taking a hard look at your income, fixed expenses, and discretionary spending. Knowing exactly what you can afford will actually give you a ability to make more informed decisions during your home search. Remember, setting yourself up with a solid budget and being mindful of long-term expenses can actually make you enjoy the home that you work so hard to get. So when I'm talking to a new first-time home buyer and a new client to us, we talk about two numbers. So the first number that you need to figure out, and this has to do with your monthly payment, is what is your ideal monthly payment? Meaning, if you could wave a magic wand that you got the monthly payment that you wanted, what would that be? So don't necessarily base that upon what you're paying in rent right now, but what would be a realistic budget that you can have for a monthly payment each month? Okay, so this is the tough one. So we call this one the walkaway number. So just imagine that you find the perfect house, like everything is there. You just need to get to closing and you don't have to do anything to redecorate and you can live there for 20 years. So the perfect house comes along and the payment is $1 more than this maximum number for you that you need to walk away from your dream home. What I mean by that is you need to have a bumper. You need to have a line in the sand that you are not willing to cross, even if the home is perfect. So you need to have this discussion with yourself or your significant other before you go home shopping. So that way, you know, if you have this line that is crossed, that you just need to walk away and call it a day, even if it is your dream home. So together, we've covered FHA loans, we've covered USDA, we've covered conventional loans, we've also covered VA, and we've talked about the differences between all the down payment assistance options and the pros and cons to all of these things. So just remember, it's not about choosing a loan, it's about finding the right fit for you in your financial situations and goals. So if your loan officer is not giving you any options or not giving you any idea of why those options are the options that they're giving you, you need to push back. Because once again, you're going to have a lot of homes in your life and probably a lot of mortgages in your life, but having the right mortgage can actually make your life easier, and having the wrong mortgage can make you regret even considering buying a house to begin with. So the tough thing is I don't get to hear from you guys since I'm the only one on camera. So if you do have questions or you're looking for personalized advice, don't hesitate to drop a comment below or reach out to me directly. I'm here to help you navigate the mortgage landscape and make the idea of buying a home a reality. So now you have a better understanding of all the first-time home buyer loans and how each option can actually fit your situation. But here's the deal. Choosing the right home loan is just the beginning. So if you want to continue to dive deeper and learn more about how to become a first-time home buyer and learn how to navigate the entire process, this next video is going to be exactly what you need to keep things moving forward. So make sure to watch it next. It's going to guide you further down the path to making you a first-time home buyer and helping your vision come to reality. Until next time.